Okay guys, good day. So real quick, let me explain how I got this entry. So like I always said, if you have been watching my old videos, I always say something about starting your analysis from bigger time frame. Once you start your analysis from bigger time frame, then you will have no problem to execute your trade on smaller time frame. You have to know what the bigger time frame is doing. Maybe it is making market always do three things. Is either it is making an impulsive moves or making a retracement, or the market is consolidating. And when the market is consolidating, or let's say when the market is choppy, it is well advisable not to trade it. No matter how good you are, it is well advisable not to trade, because there will be a lot of confusions in the market. You won't know what to do with the market. You won't know maybe to buy or sell at a particular point. Sometimes in a minute it will look like maybe the market wants to sell, and after a couple of minutes it will look like maybe this market wants to buy again. You'll be seeing different patterns, different signals that, oh, the market will buy from this, oh, the market will sell from it. So it is advisable to just stay out of the market when it is choppy, consolidating. There are people who know how to trade consolidating market actually, but breakouts can happen anytime, so you have to be careful. So now let's start with how I make this entry. This is how I actually make this entry. Comment on my bigger time frame, 4 hours. I love starting my analysis from 4 hours, but if I can't get a good picture of what I'm looking for in 4 hours, I will try daily. Like, you can't just stick to one time frame that, okay, all my analysis will be start from 4 hours. Just make sure that all your analysis should be start from bigger time frame. You can use daily as your bigger time frame. You can use 4 hours. You can use 1 hour. Just use the time frame where you know that you see a perfect picture of what you are looking for, a perfect structure, a perfect where you can understand the markets perfectly. That's what you should use as your bigger time frame. 4 hours, even if it is a week, even if it is 4 hour daily, even if it is 4 hours or 1 hour. But don't go below 1 hour. Don't go below 1 hour. So if you use 4 hours as your major structure, you can come to your 30 minutes, 15 minutes to look for your minor structure and your entry. And if you use daily, you can use your 1 hour and 30 minutes as your entry. So now let's start this. How did I get this entry? I didn't start this analysis on my 4 hours or daily. I actually use my 1 hour. So using this 1 hour, you can see some things in the market. What are the things you notice in the market? So if you are new to trading and you haven't understand structure yet, I will advise you to watch one of my video. Just scroll down, there is a video I explain structure, how it works, explaining higher higher. So you can see this place is higher high, market retraces down here, form higher low, then goes up again, created another higher high. Then what happened right here? The market came down to form another higher low. Now what happens to the market again? It goes up, created another higher high in the market. So you can see this is a retracement that the market is doing. So this is the retracement I'm trying to catch, and this one is zone, a particular zone that I know that the market might stop retracing. And you know that nobody owns the market. Market can do anything. Market might use this zone. The market might use this zone, and the market can come down here to form a double bottom. So if the market comes down here to form double bottom to start going up, so the market can decide to change direction at any time. So no one control the market. We are all speculating and saying, okay, the market should use this zone or not. So you have to be careful with your entry. So since we know that this market has already formed a new higher high and it is coming down as retracement, so why did I enter this trade? How did I know that retracement is about to start for me to enter right here? There are some things in the market that you will just see maybe a bearish candle, the market will continue going up. Like, so how am I so sure that this is a retracement and this is not just a minor retracement, that this is a major trend retracement? Coming to our lower time frame, 15 minutes, we have so many minor retracement. Let me just delete this and use an arrow. So you can see on our minor trend, you can see higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So how am I so sure that the market is not forming higher low on lower time frame? And how did I know that this market is making a bigger time frame, a major trend retracement? My 1 hour is my major time frame. So the market has already started the retracement. So the reason this is how I know. I come to my 5 minutes time frame to look for a structure shift, and I can see the structure shift clearly on 5 minutes time frame. So how did I get my structure shift? So this, checking this, you can see this higher high, this higher low. Market goes up again and formed another higher high right there and formed another higher low. And you can see this market goes up and break the top here. Once this market break the top here, it formed another higher high for us. Then what happened? As it formed another higher high for us, it break this structure, which means our major trend in an uptrend has been broken. There is a market shift here. There is a structure shift, whatever you call it. You have to understand some terms in trading. If you are new to trading, I would advise you to check my other video. You can search for any video that explain about structure. So this is a structure shift, and once a structure shift happen in the market, it means it's about to change trend. So you should know our bigger time frame is still in an uptrend. A structure shift that won't happen on bigger time frame, but this lower time frame. So once this market break here, that's when I'm so sure that this market is about to start a downtrend on small time frame, on smaller time frame. My bigger time frame is still saying it will buy, so that's why my TP is not far. Okay, so there is a structure shift right here, there's a market shift right there. Then what will I do? I started looking for my entry. So market spike here, comes down, market reach here. So that's when I realized that okay, as this market reach here, it has already formed another structure, another downtrend structure for us right here. So as market shift here, I use this as my order block and I enter my trade right here. And I set my stop loss above here. So I have to maybe count like 5 pips above here to set my stop loss, because markets might go here, is my market might go up here to take out some liquidity right over here. You know how markets behave sometimes. So that's why I actually shift my stop loss above here, so I won't be taking out in case market tries to take out some liquidity above here, because there are some people who might have set their stop loss up here. So that's why I shift my stop loss 5 pips above this order block right here. So market came back to this order block. Once this market tested this order block, I know that okay, this is the right time for me to enter. And what happened? I entered this market, and you can see we are in maybe $7 profit or so. So this market is not a long trade, because remember, don't forget, when you are trading smaller time frame, remember that this smaller time frame structure you are following. When you are following a bigger time frame structure, just remember this is a bigger time frame structure you are following, so you won't get confused. If you are following a smaller time frame structure, you won't it is not advisable to hold the market for long, because a short time frame, a small time frame, the market will only move in that direction for a small period of time. But if it is a bigger time frame, just know that you can hold the trade as long as you are using the time frame you use to analyze and to enter your trade. So I hope you understand this. Don't worry, there will be more videos. I'll keep on dropping more video explaining my entry, explaining the strategy I use. So you can actually trade using only structure. You just have to be calm with the market. Don't rush to get in. Once this market breaks here, so people might have rushed to get it. If they rush to get it, well, they will still bring a profit. But remember that there are some time that markets will act as if it has broken a structure. Then a spike will go up. Then once you go to 50-minute time frame or 30-minute time frame, you will see that it is only a week that pierce through this place. So that's what I would avoid it. That's why I actually wait for another block to form. Then another block formed, comes down, market go back to the other block. Then I took my entry right here, and I'm riding the market right now. So we are in maybe 10 or 15 pips, or within 10 to 20 pips. That's what the market is running presently. But we are not panicking. That's why I set my stop loss at 15 pips exactly. 15 pips exactly. Oh, did I say 15 pips? I mean 30 pips. Yeah, 30 pips exactly. So with each trade, I'll be catching 30 pips. And this is a smaller account. I started this account from $10 yesterday. No, yesterday. I think it was 2 days ago. So this market is still spiking, but I'll just lock my profit above this structure here, above this other block here. You don't have to panic once you know what you are doing. So that's just it, and that's it for today. I might drop more video. I might drop another video today. I'm not sure, and if I didn't drop it today, it might be tomorrow, depending on how I see my entry. If I see any entry I took the trade, I will drop the video and explain how I took the entry and everything. So thank you. Have a nice day. $3, $3, okay.